What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. This is a quick portfolio update video. This week it has been filled with fluctuations. The market was in the red during the beginning of the week due to China's Evergrande debacle, and that is when I made some positions into the portfolio. I made some purchases, and the companies I bought during the previous week are JEPI, Target, Alphabet, Equinix, Facebook, Apple, JP Morgan, Comcast, Realty Income Corp, and Duke Energy Corporation. Now, all these companies I purchased a little bit of every company because most of these companies were in the red during the past week. Facebook is in the red by a lot because of some news surrounding Facebook, which is a great time, which is good news because it has been trading at 376, 386, and right now it's trading at 346. So it's a great time to buy this business. So I did buy some more Facebook, and those are the purchases I made during this previous week. And that is how I took use of the red day in the market. Now every red day I try to buy a little bit. If the red day is really bad or if the red week is really bad, I build up, go heavy, I buy more heavily. If it's not that bad, I buy less heavy. I don't buy that much. That is why I suggest keeping 10 to 15% of your portfolio at all times in cash so that you can make use of these red days when they happen. If the market is not in the red, if I don't see any red opportunities, if everything is in the green, the market is at an all-time high, I try to avoid adding money, or I add little bit of money here and there, just like in an ETF or just like in JEPI. But other than that, I avoid making any purchases when the market is not in the red. My goal is to stay ready with enough firepower when the bad days happen, or when the market dips by, let's say, 10%, 20%, or 30%, or when that bear market starts. My goal is to stay ready with enough firepower so that I can make purchases during those times and take use of those red days. So this is what I follow. I keep 10 to 15% of my portfolio in cash, and also I buy companies in different sectors. I buy in different sectors like tech, like consumers, like financials, like industries, like real estate, like healthcare, like telecom. So all these industries, most of these industries are cyclical. So when one industry is down, the second one will be there to support the other one, to hedge against the other one in a way. So when real estate is down, the financials are doing good. When financials are down, the consumer cyclicals are doing good. So I can move money around from one portfolio to another, or if I don't want to sell, I can just add some more money to the sector that is down, and that way I can take use of those red days or the red cycles. As Howard Marks says in his book, Mastering the Market Cycle, markets are in a cycle. They go up, they go down, they go up, they go down. It's a regular cycle. And when it's a red cycle, that is a great time to buy. A green cycle, it's a great time to sell. But I don't really sell. I'm a net buyer of any business. And that's why when it's in the red cycle, just like in industries right now, companies like 3M and companies like Canadian Pacific, they are in the red. So it gives a great opportunity to buy these businesses at great prices. The book by Howard Marks, Mastering the Market Cycle, it helped me solidify my basics around the cyclicality of the markets. And it is a great book to read. So that is the strategy I follow for my portfolio. I own 22 businesses, and all these businesses are in different sectors, from tech, real estate, consumer, cyclicals, financials, to industries, to healthcare, to utilities, to telecom, in multiple sectors, so that I can take use of that market cyclicality and I can be very well diversified across different industries as well. Buying during low cycles gives you that margin of safety. As Benjamin Graham mentioned in his book, The Intelligent Investor, the margin of safety is like a buffer. It protects your principal. It protects my principal. If the market falls down by 20% tomorrow, I won't be worried because my principal, which I invested, is still safe. That is my buffer. That is my margin of safety. Such is the importance of buying businesses at the right price and at the right cycle. So far, I have gained $2,000 in dividend from this portfolio, $2,021.99 to be more precise. M1 Finance, they have added a new feature where you can see which portfolio gives you the most amount of dividends. So ETFs, they have given me the most dividend with $384 in the past 10 months, followed by consumer, which has given me $379, real estate, technology, healthcare, financials, utilities, industries, and then telecom. So all these different industries, they have paid me different amounts of dividend, which amount to $2,021 for the past 10 months, which is not a bad number at all. My goal is to take this $2,021 to $3,000 every month, $36,000 annually, so that I can start to live off of this portfolio and I don't have to depend on an active income or active job income to survive, to lead my daily life. And that is my goal for this portfolio. Get the growth and then invest that growth into these dividend paying companies, which can then help me survive and live a great lifestyle without having to depend on negative income. Now, we have a long way to go to get to our goal, but we are steadfast on our journey. We are steadfast on our journey, and we will keep on going on our journey, no matter how long it takes. It's the journey that's the fun. The destination is not that fun. The journey is more fun than the destination. So that is my update on my portfolio, guys, for this week. Please don't forget to like, comment, and subscribe to the channel. I do portfolio updates like this every week, and every week in portfolio updates like this, I try to add some new concept, some new value to the video, so that someone can learn from my video. If one person learn, it makes the whole video successful. Please don't forget to like and subscribe to the channel. Thank you for watching. This is the Frugal Investor signing out.